Let's see if it comes up on a post. Hoping so it does. No, still doesn't. Okay. Artistic, good to see you again. Evening. Your first one in today. Also, I was able to, just like always in the past, create a post with essentially the live show on my profile, which is good because Restream is still having issues with that. Okay, let's do intro disclaimer, and essentially by that time everyone should be tuned in for the first part of the live show, I'm guessing. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mars Family. My name is Miles. You can tune into this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, regulations, pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, we also do Q&As on this live as well, which means if you do have any questions anywhere during the live show, put it down in the comment section. More than happy to help you out. This is episode 447 of the CMF Live show right now, everyone's watching. On tonight's live, we're going to be covering news regarding essentially Bitcoin and AI and what stage we're at right now. Is it having a negative impact or a positive impact, or are we just still a bit staggered and not moving upwards because of this whole geopolitical tensions of a war possibly happening? We're also going to talk about tonight's live regarding prediction market spaces. I've talked about prediction markets, biggest one essentially being Polymarket that everyone's very familiar with. It actually does help to give you an indication of where the market's going. We're also going to talk about tonight's live regarding Stripe and their bridge essentially payment system that received the license, which we talked about. But we have some more updates on that. We're going to talk about the Federal Reserve on tonight's live show as well. Something positive happened for the crypto space. We don't have a Clarity Act passed or essentially the stablecoin yield situation fixed. However, we do have good news from the Fed that's very positive for the crypto space. We're also going to talk about the SEC. They've introduced something positive for the crypto space as well. We're going to talk about Binance on tonight's live show. We're also going to be talking about Tether on tonight's live show as well. We're going to talk about Meta on tonight's live, which is essentially a topic that we never discussed on this live show, unless if we go back 2-3 years where I first mentioned Meta had a crypto project called Libra Coin, which completely failed. We're also going to talk about tonight's live regarding news of essentially AI and crypto payments. And we're going to go obviously through some Ripple news as we always do. But the first news is regarding essentially Bitcoin and cryptocurrencies. Now, before we start the live show off, obviously, let's go inside the comment section first. Let's see what's happening there. And honestly, thank you so much to everybody who has already liked and retweeted this live show. As I've said essentially yesterday as well, I was able to fix the issue that we've been having. Essentially the issue that we've been having when I go live, it doesn't come up on X unless you click on the little circle, which is my profile picture. But I have turned this live show into a post on X and I've pinned it as my #1 post on my profile. So if you have liked and retweeted this live show, CMF members, thank you so much. If you haven't, on my profile, the pinned essentially tweet is this live show right now. Retweet and like it if you already haven't. If you have, thanks so much to every single one of you. And if you're watching us on YouTube and you've already liked the live show as well, thank you so much as well. Now, let's go to the comment section first. Let's see what's happening there, and then straight into the first news. T, good to see you as well. How you doing? Hi, Miles. Good to see you, brother. Good to see you as well. T, how you doing? Good evening, Miles and CMF. Free and February. Good to see you as well. How you doing? Hello, Miles and CMF. Comatose. Good to see you as well. How you doing? Good evening, Professor Miles and the rest of the family. Good to see you as well, Funky. How you doing? Hello, Miles and CMF. I hope that you had a good day. Let's go, Scott. Good to see you, as well, brother. How you doing? Hope you had a good day too. Good evening, Miles and family. Ian, good to see you, as well. How you doing, brother? Today, X was playing up, so I'm on YouTube. Fair enough. Good to see you on YouTube. Miles, Trump will give a long speech tonight. I've heard, I don't know what he's going to be saying. It could be about the, essentially the hockey thing that essentially America won, which was amazing to watch. The highlights. I haven't seen the whole match. But it also could be the geopolitical tensions. It could be about trade, essentially, in terms of tariffs. There's quite a lot of things that Trump can talk about in his long speech. I'm not sure which way he's going to go down that route. This market is just stuck in limbo. Doesn't seem like we're ever going to get out of it. It does seem like that, to be honest. The market is essentially stuck in some sort of a limbo position. You are correct. And it is, as I explained, because of geopolitical tensions, the market doesn't know which way it's going to go up. There are analysts suggesting that we could be seeing at 50,000 still. And there's also analysts suggesting that we have already reached the bottom. We're just a bit stuck because of the war between Iran, Israel, US, China, and Russia, which is essentially making the market not being able to move up to a certain price point. And also, we don't have a Clarity Act still. That would help a lot. Evening, Miles and CMF. Jason, good to see you as well. How you doing? Evening, Miles and family. Susie, good to see you as well. How you doing? Now, the first news on tonight's live is regarding Bitcoin and AI. There's some essentially perspectives going around inside the crypto space and the AI space. And the topic is that AI is going to advance crypto. And the other topic is essentially is that AI is actually damaging crypto, not in the long term, just the short term, because a lot of money is being inflowed essentially into AI projects. And there's an outflow happening situation when it comes to cryptocurrencies. But to be fair, in a digital world, for AI to exist, crypto needs to exist as well, and crypto needs to exist for AI to exist, and so on. And I'll explain a little bit more on that as we go throughout the live show, because with one particular article. But for now, Bitcoin has successfully reclaimed the $64,000 essentially level again, following the period of intense volatility, providing essentially a much needed reprieve essentially for digital asset market spaces. This recovery essentially coincided with a stabilization in the broader technology sector, particularly as the aggressive sell-offs in AI-related essentially software stocks began to ease. The shift essentially in sentiment has allowed Bitcoin to decouple from the recent downward pressure of the Nasdaq, enticing essentially buyers back into the market space as macro concerns regarding tech valuations temporarily essentially subsided. The rebound in Bitcoin's price has triggered a significant rally, you could say, among major cryptocurrencies, mining companies, which had been battered essentially during the previous week's downturns. So far, a lot of Bitcoin mining companies have actually turned to AI data centers to make some sort of an income during this downward pressure Bitcoin has been experiencing. One even went as far as changing their entire company name. Operational leverage. Stocks like Riot Platforms, essentially Marathon Digital, which are the biggest Bitcoin mining corporations, saw double-digit gains as investors bet on improved profit margins resulting from a price discovery. That's good that Bitcoin mining essentially companies on the open market space, their stocks are seeing double digits now. AI pivot synergy. Several miners benefited from easing the software route due to their essentially dual roles in providing high performance computing power for AI workloads, a strategy essentially that is increasingly stabilizing their balance sheets, which is true. A lot of AI companies, as I said, have went towards data centers to at least make some sort of an income while the market goes through, the ups and downs. Network difficulty. Despite the price fluctuations, the Bitcoin network has remained resilient, you could say, with hash rates levels reaching new highs as miners continue to upgrade to more efficient hardware ahead of their next essentially difficulty adjustments. Market analysts also suggest that while the immediate recovery is encouraging, the utility era of 2026 remains sensitive to ongoing geopolitical tensions and the looming effects of the Clarity Act. So, in other words, two things right now are holding the crypto market space back from an absolute blast off. One is the Clarity Act. And it definitely is holding the market space back. It was holding it back last year when we went through a 45-day government shutdown, and it is still holding it back right now. The second thing they're saying that's keeping the market essentially not being able to move is still the geopolitical tensions, where we don't know when the US is going to strike Iran, or we don't know when Israel is going to strike Iran, and essentially what's going to be coming out of that in terms of how long will that war last. Now, I've explained the two scenarios in the past, essentially, and yesterday as well, of what could possibly happen. The focus is now shifting towards whether Bitcoin can transform its local bottom into a sustained move back, essentially towards $70,000. For now, the easing of software routes has provided liquidity necessary for markets to reinforce on digital asset fundamentals and the growing integration of blockchain infrastructure within the essentially goal of financial systems. So Bitcoin is easing, you could pretty much say. Today we started a day on a downward pressure. Now we're essentially stabilizing, you could say right now. We still don't want to, we're still not where we want to be, but as I explained, there's many factors in play. Biggest ones, Clarity Act. Second biggest essentially is the geopolitical tensions. Now, moving on from Bitcoin easing once again to what else is essentially happening inside the market space? Well, one of the biggest things is prediction markets. Prediction markets are becoming a phenomenon, you could pretty much say. Every institution, by the looks of it, wants to be involved in prediction markets. It's like a casino, but slash stock market, you could pretty much say. Prediction markets have officially transitioned from a niche sector to a financial powerhouse, currently hitting a massive $3 billion in annual run essentially rates, according to a new report from Citizens. This explosive essentially growth essentially is being driven by a fundamental shift in how global participants use decentralized platforms to hedge essentially against real-world outcomes ranging from geopolitical conflicts to macroeconomic data releases. As these platforms essentially gain liquidity, they are increasingly viewed as more accurate truth machines than traditional polling or expert forecasting, attracting a new wave of institutional capital. What they exactly mean by that is you can't trust essentially CNBC, you can't trust MSN News, you can't trust ABC News, you can't trust a lot of news essentially channels out there, not just US news channels, UK essentially news channels, European news channels, any sort of essentially Middle Eastern news channels or Asian market essentially news channels. You just can't trust what they say because they lie a lot. It's like essentially they're reading from a script. But do you know what isn't like reading from a script? Prediction markets, because it's random people around the world, and it could also be coordinated people around the world, but they are putting their hard-earned money down and they're telling you which way they think the market's going to go, or which way of voting essentially is going to go for the next president, the next politician, the next prime minister, the next CEO, the CFO. And every one of those indications tells us where the market could go for that company, for that project, or for that country, essentially. And that's why they're seeing essentially prediction markets as the next big thing still. The Citizens Report also highlights several key factors that are expected to propel the market towards a $10 billion valuation by the end, essentially, of the decade. Now, mainstream integrations, major fintech apps, essentially, and traditional brokerage platforms are beginning to integrate prediction market data, allowing retail users to trade on outcomes directly within their existing financial ecosystems. What they mean by that is there's actually a lot of behemoths inside the corporate section that are actually thinking about bringing prediction markets to their client base. It could be via just data, or it could also be they're providing prediction market essentially trading for them. Regulatory clarity. Following the essentially president's set in late 2025, clearer guidelines for event-based trading have reduced the legal essentially risks for operators, encouraging larger market makers to provide deep liquidity. The utility era synergy. Prediction markets are becoming essential tools for the insurance and supply chain industries, which use the collective intelligence of these platforms to price essentially risk more effectively in a volatile global economy. Despite the optimistic outlooks, the reports essentially caution that the industry must still navigate certain essentially significant hurdles, including high-profile coordinated attacks on protocol integrity and the potential for manipulation in low liquidity essentially markets. Analysts also suggest that the next phase of growth will depend on implementation of more essentially robust decentralized dispute resolutions and mechanisms as we move further into 2026. The success of these platforms is being essentially seen as a critical validation of blockchain's ability to provide transparent, unmanipulated data for the global financial supercycle. And it is something definitely we need because this world is very, very manipulated on a lot of essentially things and a huge scale, you could pretty much say. When it comes to essentially, who is going to be the next president, for the longest time, they were telling people the next president of the United States is going to be Hillary Clinton because that's what the polling stations said. And that's what essentially was the data that everybody would rely on during essentially those times. Now people are actually relying on Polymarket than they would of polling stations announced on CNBC News. So it just tells you essentially there is a shift happening in every aspect of the market space or in every aspect of announcements, news, entertainment. There's a massive change happening as the world is transitioning into this digital space. It's not just about money going digital, a lot of things are happening where the world will become more transparent up to a certain extent. Now, also, based on that, and based on everything else that's happening in terms of every sector, stablecoins. Now, I talked essentially, shared information to everyone on this live show regarding essentially Stripe's Bridge essentially partnership. So Stripe and Bridge essentially getting a license to be able to operate just like Ripple got a license or Paxos or Circle and so on to be some sort of a neo bank, you could pretty much say. Now we have announcements, you could pretty much say, or updates or reports of what they're thinking the market space is going to get to in terms of stable coins. Before we talk about that, let's go to the comment section first. Let's see what's happening there, and then we go straight into essentially the next news on tonight's live. Sorry about that, was an eyelash in my eye. So let's see where we're at inside the comment section. We were here. Good evening, all. JP, good to see you, brother. How you doing? How you been? Share the live. Let's go, Scott. Let's go, Miles. Let's go, Scott. Don't sleep on XLM. Facts. Incredible project as well. And what up, Miles? Is CMF. Ray, good to see you, brother. How you doing? XLM, XDC, SHX, XLP, and HBot. Let's go, Scott. Clarity Act, Clarity Act, and Clarity Act. Yep. Why are we telling them we are going to strike them and get it over with if we're going to strike? I shared a video today about this. I agree 100%. The issue with essentially what's happening in the Middle East between Iran and the US and Israel and possibly China and Russia getting involved by selling weaponry to Iran is that they know for a fact that the moment the first strike happens on Iran is going to empty its arsenal on every country around it. And that could be essentially Bahrain, Kuwait, Qatar, Turkey, essentially the UAE. Dubai could also possibly hit as well. A lot of civilian casualty is going to be happening once it happens. They're also going to be attacking, obviously, Israel as well when it comes to that. So a huge amount of essentially civilian casualty will happen. They know that, and they know that the moment they attack, that is going to happen. Iran is just going to empty its arsenal, and whatever they hit, they hit. Iran doesn't have advanced weaponry technology. Whatever they do have is cheap stuff from China and whatever Russia sells them essentially on the side. Iran doesn't have any, high-tech performance, essentially weapon grade systems. As much as people like to create these funny TikTok videos of Iran having some sort of a massive strength, it really doesn't in reality. There's a big difference between reality and someone creating a TikTok video showing strength of a military that doesn't exist. So why they possibly haven't attacked yet is because they know for a fact the first strike on Iran, if the US or Trump essentially makes the first strike on Iran, Iran will empty everything it has. Every missile will be hitting every country around it. Whoever it hits, whatever it hits. So they have to make sure that's going to happen, and we have to somehow hit all of them in the sky before it hits any countries out there. So there's a lot of there's a lot of things that they have to factor in because they're not versing a country that thinks logically with common sense. Iran's government, they're just a bunch of lunatics. The Islamic Republic of Iran are a bunch of lunatics, and it's difficult to pinpoint what a lunatic's next move is going to be in any type of scenario, and that's what their main issue is. Based on my research, tired of BTC2, decoupling is necessary. I predict that BTC will fall. I agree with you 100%. Everybody wants to see that decoupling scenario happen inside the crypto space. Something I've talked about for the past 2 years, that, when decoupling happens, you would see the bigger picture of cryptocurrencies and the point of cryptocurrencies, which is Utility, I agree. Based on my research and what I've read, Mao's great article today, once everyone recognizes the intrinsics and extrinsics of values of XRP and XLM, there will be no long-term real value in BTC. Thank you for reading the article that I released today. Every day I release a article essentially on Substacks if anybody wants to go and read it, but I release an article in a very different manner. So typically when someone sees a crypto article, it's just, the article itself, and some people will read it, they still wouldn't understand it. So what I've done is essentially bring institutional thinking to an understanding of the retail section. So I break things down. So I share you the news, and then afterwards I break it down essentially of what it means in my own perspective. I try to make it, as simple as I possibly can, so everybody has a better understanding. And it's not just news that I write about. I also write about things you should know about in terms of geopolitical tensions, in terms of the economy, in terms of different jurisdictions, what they're essentially achieved so far, how does money work, and so on. So there's a lot of things that I'm sharing, but every day I release one article that everybody could go and check out on Substacks. If you already haven't checked it out, go and check it out. It's on my profile on X. Essentially, the link for my Substacks is inside the Telegram group. It's pretty much pasted it everywhere. So you still haven't checked it out, go and check it out. My Substacks, it's definitely a good read if you haven't yet. Now, Stripe essentially is what we're going to talk about next on tonight. Actually, not before we go to Stripe. Hi, Miles and CMF. Stormy, good to see you as well. How you doing? Good evening, Miles and CMF. Mike, good to see you as well. How you doing? Good evening, Miles and CMF. Someone, good to see you as well. How you doing? We need to send in the special forces and or minimize anything Iran can do before that actually happens, if we are going to be in harm's way anyway. I agree, Scott, 100%. Now, Stripe. Stripe's bridge essentially sees stablecoin volumes quadruple as utility insulates essentially from market volatility. So Stripe is predicting that the stablecoin market space is going to quadruple, not triple or double, but quadruple. Stripe's stablecoin focused platform, Bridge, has reported a massive fourfold increase in transaction volumes, signaling essentially that the utility era of digital assets is successfully decoupling from essentially traditional market cycles. According to a report essentially that came out today from Stripe, the surge in activity is being driven primarily by cross-border business payments and automated treasury management rather than speculative retail trading. So what Stripe is telling everybody right now is that they're seeing actually more inflows from institutions or institutional clients or high net worth clients than they are seeing from the retail section with Bridge, which is Stripe's essentially crypto platform. By providing a seamless API for businesses to move USD peg assets globally, Stripe is demonstrating that such a practical financial infrastructure can remain resilient even when broader crypto prices experience a winter sentiment. The rapid scaling of Bridge highlighting a shift in how global corporations are viewing stablecoins as a primary essential tool for liquidity. This is great. Honestly, the data that Stripe is sharing with us today, that they're essentially, in terms of stablecoins, they've quadrupled in terms of payments. It's a huge thing, because it also tells us that there are more institutions or high net worth clients inside the market space now than there are retail speculative trading happening, which is exactly what we want to happen. We want high net worth clients inside the crypto space. We want institutions inside the crypto space, and we want them to bring their wallets with them. Business adoption. Small and medium-sized enterprises essentially are increasingly using the platform to bypass traditional Swift delays. Now that is that is one sentence that was used by Ripple. Ripple's main core at one point in time, and still is right now, is one of their main points, is that small and medium-sized businesses are the ones that struggle the most under a Swift payment system, that they have struggled for years under a Swift payment system. Because large corporations can afford to go international and use Swift's payment system and pay those ridiculous fees or those ridiculous and wait for those ridiculous timelines to essentially pass for the payment to be processed. However, a lot of small and medium-sized businesses struggle to go international, which meant their businesses stayed the size they essentially started out to, and a little bit bigger, but that's pretty much it. They never were able to go fully international because of too much fees when it came to Swift or the payment delays essentially they were experiencing. So Ripple decided to essentially create the Ripple payment system that helped small and medium sized businesses enter the international market space so they can grow as a company and bring more money towards the table space. And then Ripple introduced the XRP ledger to these businesses, these medium and small businesses that they first brought in through the door with Ripple payments. And a lot of people thought there was it was Ripple payments and XRP, and that's two separate things. But what Ripple did was a business tactic. They brought all these small and medium sized businesses around the world in through the door using Ripple payments. And then later on, introduced XRP Ledger to them and said, look, if you want to even think bigger on a larger scale, XRP Ledger is your next move. You use Ripple payments, you love Ripple payments, you were able to grow your company with Ripple payments. Now you can grow your company even further with the XRP Ledger. It was just a business tactic that Ripple used. And a lot of people couldn't see that because they're not inside the business sector. Now, stablecoin diversity. While USDC essentially remains a dominant force on the platform, the quadruple growth has essentially been bolstered by the integration of new yield bearing stablecoins that allow businesses to earn on their money essentially in flight. Network efficiency. The volume increases has been most notable on high speed layer 2 networks, which have significantly essentially lowered the cost of high frequency corporate transactions compared to legacy banking rails. Industry analysts also suggest that Stripe's success with Bridge provides a blueprint for how fintech giants essentially can integrate blockchain technology without exposing users to volatility of unbacked assets, as the US essentially Treasury explores boosting T-bill essentially issuance to accommodate the $2 trillion stablecoin market space. Bridge's essentially performance serves as a real-time proof concept of the Genius Act and other essentially regulatory frameworks that's been discussed right now in the US. This growth also confirms that demand for digital dollars is no longer tied to the hype cycle, but is instead becoming a foundational component of the modern global commerce, which is incredible also, because just as cryptocurrencies were known as speculative for the longest time, not so much anymore, because this is the year of integrations and utility era, and the amount of corporations we have inside the crypto sector now is huge compared to what it was before. And also stablecoins now showing proof that essentially a digital form of fiat currency could actually work, and that small and medium-sized businesses are actually using digital dollars compared to using dollars to go international. But then again, every time USDT prints, USDC prints, RRUSD prints, PYUSD prints, any of these stablecoins, every time they print, they need to back it with essentially bonds or issuance, T-bills, and so on, and even fiat, which again strengthens the US dollars. Which essentially, as I said, for the longest time, the argument of the US dollar is going to zero is never going to happen. Now, the Federal Reserve. The Federal Reserve is what we're going to talk about next, and what's come out of them is brilliant news, very positive for the crypto space. And it is something they discussed essentially previously as well, where essentially there's a criticism that's been happening from the banking sector, where they criticize the crypto space and still don't let them essentially enter the financial sector the way crypto companies want to. We saw that happening when companies like essentially Ripple and Circle and Paxos decided to essentially get a banking charter license, and the OCC with the SEC were bombarded essentially with emails and letters by the banking associations to tell them to slow down and not let these essentially these tech companies or blockchain companies enter the banking space this quickly or this easily, which the OCC essentially is you could say pretty much rejected the banking association's perspective on that matter. And we know who weaponized them, the banks themselves. They don't like the idea of competition. Let's just put it that way. Everybody can remember the Titanic story of why banks don't like competition. Now, the Federal Reserve has introduced a landmark proposal aimed at ending the essentially practice of debanking crypto native firms by removing essentially reputation risk as a valid reason for banks to deny services. Now, this is essentially what was released by CoinDesk today. This move follows years of complaints from the digital asset industry, which argued that vague regulatory guidance allowed banks to essentially shutter accounts of legitimate businesses to avoid perceived scrutiny. By scrapping essentially this subjective metric, the Fed intends to create a more objective, merit-based framework for financial institutions to essentially evaluate digital asset clients, ensuring that compliant heavy firms have a fair access to the US banking system. What this means in the most simplest term is that companies inside the US or blockchain firms inside the US that actually have licensing, which means, they have a regulatory foothold. They're not just some, random blockchain company, no licenses to their names, no contracts to their names, and they're just trying to provide services. That is wrong and could be seen as money laundering. However, companies essentially, the banks arguing that scenario is quite extreme, you could pretty much say, because they're not countering the companies that actually have licensings like Ripple, Circle, Coinbase, and so on, that can and should be allowed, to be added to the banking sector, you could pretty much say. So the Fed is now saying that companies, blockchain companies, in other words, that were rejected by the banks because of those types of scenarios, now we're going to move to a merit based scenario, which means if you are a blockchain company with the correct licensing on paper, you should be able to connect to the banking sector and not be rejected by the banks or have your accounts essentially closed down. And it could also go on terms of the high net worth client spaces as well, also in terms of companies as well. Now, the proposed rule change is expected to provide significant relief to the sector that has felt systematically sidelined since the operation essentially choke point 2.0 and concerns of 2023. Objective compliance. Banks will now be required to base their onboarding and maintenance essentially decisions on tangible anti-money laundering AML and know your customer failures rather than abstract essentially concerns. So this is essentially the part for clients, clients that have their bank accounts closed for being involved inside the crypto space. Banks will no longer, they shouldn't be closing those accounts down. Instead, it's about know your customers or essentially anti-money laundering laws. And also, if it's a blockchain company, what licenses do they have? It's merit based, and that's how it should be. Banking stability. The Fed believes that clearer guidelines will actually improve banking stability by bringing crypto transactions back into the regulated banking essentially perimeter rather than pushing them towards offshore or shadow banking alternatives, which means blockchain companies aren't slowing down. As much as the banks want to slow down their progress, blockchain companies like Ripple are not slowing down. If they get pushed out, they will just go even further on an international basis, which is exactly what happened with the Ripple case. They thought, weaponizing the SEC to go after Ripple for no apparent reason, just to slow them down, would work, and Ripple would shut their doors essentially and walk away. Instead, Ripple essentially getting pushed out. They ended up going international. They acquired as many licenses as they could in Singapore, Hong Kong, essentially the Middle East, Australia, the UK, the EU, and so on. They went completely international. It actually worked out in their favor in the long run. So they're saying, instead of, pushing companies out because the banks don't want to work with them because it might be money laundering or so on, how about we introduce a merit-based system where essentially we could put certain people, or essentially people or companies, blockchain companies, in, like, for example, a green zone and a red zone. And if a company or a person is inside a green zone, that means that person doesn't do money laundering and has proven who he is, and therefore his bank should not be closing his accounts down, which I agree with 100%. Now, analysts also suggest that the move could encourage a mid-tier or regional, essentially, banks to compete for crypto businesses, potentially lowering costs for startups and improving the overall liquidity of utility era ecosystems, which is true. If we want to go inside this utility era, we need the banks to be there too, as much as they might be very, very stubborn on that sector, on that matter, essentially. But even they know that they need to be there. And eventually, even if they don't and still throw hurdles for the crypto space, eventually crypto companies will replace them anyways. Binance is trying to become a bank. Crypto.com is trying to become their own bank. Coinbase is trying to become their own bank. Circle is trying to become its own bank. Ripple is trying to become its own bank. So it comes back to that old saying that everybody's very familiar with. If you can't beat them, join them. It used to be the other way around where the banks had all the monopoly, but essentially it's like an hourglass and the time is running out for the banks. And the banks have, should be coming to a conclusion of we can't beat them, we might as well join the crypto space. And with the Fed merit system now in progress, they have no choice. The policy shift arrives at a critical juncture as the US government essentially prepares for the full implementation of the Clarity Act and the emergence of a $2 trillion stablecoin essentially market space. By normalizing the banking relationship with digital asset firms, the Fed is effectively aligning with the fundamentals, essentially, goal of making essentially the US a global hub for financial technology. While some critics argue that this could increase the risk of financial contagion, the prevailing view among industry leaders is that the rule represents the final bridge needed to integrate blockchain technology into the heart of the American economy, which is true. As much as the banks might want to fight it and still want to remain number one, time is running out for them. So it's better that the banking sector connects with the crypto sector now on the basis of merits rather than speculation. Amazing, extremely positive that the Fed is doing that, especially now with the whole discussions of the Clarity Act and the yield scenarios. We are seeing more positive news coming out in terms of, one, the CFTC has more power over the SEC for the crypto sector. Two, the CFTC essentially creating this board of advisors of Brad Garlinghouse and Brian Armstrong and a few other people on the list, which again gives credibility towards the crypto space. And now the Fed coming out and saying, the banks once again need to work with the crypto space. And how about we create a merit based system? So there's a lot of tweaks happening essentially that's giving the crypto space an edge right now compared to in the past in Biden's administration, where crypto had no edge and instead it was either imprisonment or be shoved out the United States. Now, moving on from that to tokenization. It's another big subject inside the crypto space. And one of the biggest firms out there, Wisdom Tree essentially, has just essentially been approved by the SEC to introduce a 24/7 trading of tokenized money market funds. That is also big news as well. A behemoth like Wisdom Tree essentially being accepted by the SEC to offer tokenization and 24/7 trading of tokenized money market funds is huge news today. The Securities and Exchange Commission, essentially SEC, has officially approved a groundbreaking proposal for Wisdom Tree to allow a 24/7 trading of its tokenized money market fund. The decision essentially marks a pivotal shift in US financial regulations, moving away from traditional, essentially, market hours model towards a continuous blockchain based settlement system. By allowing investors to move in and out of interest bearing government fund tokens at any time. Wisdom Tree is positioning its digital assets as essentially a functional yield generating alternative to traditional cash and stablecoins. The approval is expected to accelerate the integration of essentially traditional finance into the utility era by providing a regulated bridge for institutional liquidity. Instant liquidity in terms of 24/7 trading capabilities eliminates the settlement gap inherent in essentially legacy banking, allowing for real-time treasury management and collateral essentially movements even on weekends and essentially like holidays. The XRP ledger's integration into this whole Wisdom Tree scenario, let's say. Industry experts note that Wisdom Tree's focus on high speed, low cost blockchains like the XRP ledger for these tokenized products underscores the ledger's growing role as a preferred venue for institutional world class real world assets. So it seems like that essentially Wisdom Tree is en route to use the XRP ledger for their tokenization of the money market funds for 24/7 market space. Because if they want to have an edge inside the market space, they want something that's low cost and extremely fast and extremely secure. There's no other blockchain out there rather than the XRP ledger, to be fairly honest. So Wisdom Tree is essentially entering the 24/7 market space, offering trading, offering real world assets. Are they going to be using the XRP ledger? It makes a lot of sense for them to do so. They're also partnered essentially with Ripple and some essentially business essentially deals, even through third parties. Analysts also suggest that this SEC approval is a direct response to the market demand seen in the $2 trillion essentially stablecoin sector and the essentially recent legislative progress of the Genius Act. By legitimizing a 24/7 money market fund, the SEC is effectively endorsing the use of blockchain for core financial market infrastructure. As more asset managers look to follow Wisdom Tree's lead, the distinction between crypto markets and traditional markets continues to blur, moving the global economy closer to a unified on-chain financial system. Now, I also released a Substacks on this matter, not on Wisdom Tree, but on the matter of essentially how crypto is integrating itself furthermore inside the financial sector and how it is essentially being accepted on certain levels and what things need to happen for a full digital world to happen. So if you haven't read it, once again, I'm going to read the Substacks, not right now, but after this live show. Now, Binance is what we can talk about next on tonight's live. Before we talk about Binance, let's go start the conversation first. Let's see what's happening there, and then we go straight into the next news on tonight's live. So let's see where we're at inside the conversation. We were here. Good evening, Miles and CMF. Mike, good to see you as well, brother. How you doing? Good evening, Miles and CMF. Solomon, good to see you as well. How you doing? How's things? Okay, we were here, I think. Otherwise, no, actually, we're here. Buy silver. Ed says just buy silver. Miles, just in case someone wants to take out a little money during a price appreciation of XRP and XLM, what's the best way to do it? If you do want to sell some of your assets, maybe to pay bills, or maybe because certain assets have reached a certain price point, this is not financial advice whatsoever. You can cash out essentially using a platform like Uphold, for example. I think Uphold is a brilliant platform if anybody wants to use it to cash out a certain amount of cryptocurrencies. They can cash out to your bank card within 3 minutes or even less, actually, to be very honest. People who I know essentially use it or so on. It takes less than 30 seconds. The money's in your bank account. So you can transfer your crypto to essentially whatever you want to cash out. You can transfer your cryptos to Uphold and even use the Uphold card to make transactions happen or use Apple Pay for Uphold card. Or you can, there's an option essentially in Uphold where you can cash out to your bank account essentially within 30 seconds. Now, let's see what else we're at. And will Ripple buy out Swift or will Swift incorporate the Ripple program? I'll be very honest. There's no way in hell that Ripple is going to be able to buy out. Essentially, there's no way in hell Swift is going to ever buy out Ripple, and I don't think Ripple is ever going to buy out Swift because Swift is a dying corporation in my eyes. Too many countries have moved away from Swift. Even though Swift is doing so much testing in the blockchain sector, day by day we are hearing, you can pretty much say a weekly basis, we're hearing news of more countries leaving Swift behind. To be fairly honest. Swift has just left a bad taste in everybody's mouth regarding the whole sanction scenario where, they are a political company. Once they get essentially ordered, you could pretty much say, they go around sanctioning countries, like essentially Russia in that sense, with the Ukraine war scenario happening, which I understand why they were sanctioned. However, that does make Swift look bad. And companies like Ripple that offer essentially XRP Ledger, which essentially is on its own in terms of decentralized platform, it's just a better alternative. They can't go around. Nobody can go around sanction countries on the XRP Ledger. And yet again, even though Swift, as I said, Swift is, partnering up with Chainlink or partnering up with Solana or partnering up with all these blockchain projects out there, we're still hearing news of more Latin American countries or Asian countries or Middle Eastern countries completely shifting away from Swift. Even though Swift is trying to make progress inside the blockchain sector, nobody's interested about their essentially progress, which is ironic because Swift said, or two members from Swift once tweeted out on X, nobody's going to use the XRP ledger. No institution trusts Ripple. Yet, day by day, we hear news from different countries who are actually moving away from Swift, even though Swift is saying we're making progress on these partnerships and blockchain technology. Nobody's interested in Swift anymore. The only countries that are still interested in Swift is obviously America, essentially UK or Europe. But even then again, Europe is also looking into an alternative payment systems as well. They're tired of paying these ridiculous fees to Swift, even though Swift is going fully blockchain, which means they shouldn't have those ridiculous fees anymore, or that timeline essentially to make payments happen. Still, the Europeans are looking for alternative systems. The Europeans are actually going as far as even trying to move away from MasterCard and Visa, never mind just Swift. So that's why it's just a dying payment system or messaging standard or a political essentially company. And there's no point of Ripple ever investing into them. If they want to incorporate essentially with Ripple, it'd be quite embarrassing for Swift, to be fairly honest, after the tweets two members from Swift sent out a while ago that nobody wants to use the XRP ledger. So if the news comes out that Swift has partnered with Ripple, it's very embarrassing for Swift because they went from ignoring Ripple at the beginning, essentially early days, where Ripple was talking about financial sector and payments and so on, Ripple payments, and they were designing themselves alongside banks and getting tested by banks and going back to the banks and saying, how about is this better or not, and going back to drawing boards. And then Ripple got then essentially at that time, Swift was still ignoring blockchain sector. And then Ripple got their name essentially on a PDF documentation called cross-border payments on the Bank in the World International, the BIS essentially, PDF document public information alongside Swift. They got their name alongside Swift, and that's when Swift started taking blockchain seriously pretty much a week after that. So And then after that, they criticize Ripple, essentially an XRP ledger. If they do partner up with Ripple, it's very, very embarrassing for Swift. Not embarrassing for Ripple because it shows that it's a superior, essentially, payment system compared to what Swift is trying to create. But it is embarrassing for Swift after the criticism they threw out to Ripple. Any thoughts today on SHX or Flare? No thoughts whatsoever, I'll be honest. Any word on XDC today? No word either on that too. All facts, bro. The Titanic situation was crazy regarding taking out the competition. Brutal. It worked out technically, but at what cost? Changed everything. Facts. Let's go, Ray. In XD, it's XDC. Is XDC considered to be in the same category as XLM and XRP? I do think so. Yes. XDC, in my opinion, is in the same category as XRP in XLM. It's not on the same level as XRP. XRP for me ranks number one inside the financial sector, XLM 2, XDC 3, I would have to say, but it's in the same category, sure. Share the line. Let's go, Scott. Do not forget about Miles' Substacks. Let's go, Scott. Thanks so much for posting inside the comment section of Substacks. The above links is Miles' Substacks for today. Let's go, Scott. Let's go, CMF. Let's go, Miles. Let's go, Miles. Hit the like button. Let's go, Scott. By the way, CMF members, if you haven't already liked the live show or retweeted the live show, it's pinned on my profile on X like it always was, essentially in the past as well. If you have, thank you so much for liking and retweeting the live show. Hi, Miles. What's going on with the full run? Johnny, good to see you. How you doing? Because it considers a variable change, Johnny. Ray says facts. Love Uphold. It works perfectly. The Uphold debit card earned me a lot of XRP in points as well. Yes, one factor about Uphold is also that they give you cash back in XRP every time you use Uphold to make a payment. Essentially, where you could be using your debit card or your credit card. If you use Uphold, they give you cash back in XRP, which is something everybody loves to hear. Highly essentially recommended. Works overseas perfectly as well. Coinbase is very shady if they use overseas as they freeze your account and want to know why you're overseas. I agree. Coinbase does react more like a bank compared to Uphold. Miles, is a good idea. Sell some crypto for bills and have time to buy back soon, or not so much in time. Johnny, the issue with essentially, if you have bills, if you're somebody right now inside the crypto sector that you have bills to pay and you need money, then sure, if you want to sell a little bit of your cryptocurrency, again, none of this is financial advice at all, not financial advice. But if you have bills to pay, then you shouldn't be putting yourself under pressure, and you could sell a little bit of your cryptocurrencies to pay your bills. If you're not under pressure, then you don't need to sell your cryptocurrencies to pay bills. And is it a good idea to essentially sell now, pay your bills, essentially buy back in at a lower price point? We could see lower price points because it is war that's going to be happening, but we can also see a jump happening inside the market space because of the Clarity Act that we just don't know when exactly it's going to pass. We're just going to get a sudden news announcement, Clarity Act passed. So that's also a possibility as well. But if you have bills to pay and you're under pressure, why not sell some of your cryptocurrencies to pay your bills? And a possibility of going downwards is also on the table because of a war scenario. Again, none of this is financial advice at all. I like Uphold too. I've used it often and had no problems using it. Let's go. Everybody likes Uphold inside CMF. That's good. In the long run, let's go, Scott. I wondered how the money transferred to the FBI director was transferred, BTC, XRP, etc. I don't know, I'll be honest. Now, Binance is what we're going to talk about next on tonight's live. A very different news from Binance today, because yesterday was a lot of speculation news, you can say, from Binance. Not from Binance itself, but from, essentially news companies out there who are writing articles about Binance. But today, Binance brings back tokenized stocks trading via essentially Ondo Finance deal. So it's not just Wisdom Tree that wants to be involved inside this prediction, tokenization, 24/7 money market fund space. Binance wants to be involved as well. Binance has announced a major return to the equity markets by relaunching its tokenized, essentially stock trading services through a partnership with Ondo Finance. This is big for Ondo Finance as well. This move allows Binance users to trade digital versions of traditional stocks such as Tesla, Apple, and Coinbase directly on the blockchain by utilizing essentially Ondo Finance's specialized infrastructure for real-world assets. The exchange also aims to provide a more compliant and transparent framework rather than essentially its previous attempt to stock tokens, which was shattered essentially in 2020, which was essentially shuttered in 2021 following a regulatory pressure. The partnership essentially is a significant milestone for the utility era as it merges the liquidity of the world's largest crypto exchange with the growing demand essentially for on-chain traditional finance. Enhanced liquidity, users can now trade fractional shares of high value essentially stocks 24/7, removing the limitations of essentially traditional market hours and high entry costs. On the finances of real world asset infrastructure, the deal leverages on those essentially proven track record in tokenizing US treasuries and other institutional grade assets, ensuring that each tokenized stock is fully collateralized and audited. Regulatory navigation, unlike previous essential iterations, this rollout is designed to align with the latest global frameworks for digital securities, targeting qualified jurisdictions to avoid the compliance and pitfalls of the past. Market analysts also view this relaunch as a direct challenge to traditional brokerages and major boost also for the XRP ledger and other chains capable of handling high-speed real-world asset settlements. Now, moving on, essentially from Binance also want to be involved and relaunching 24/7 stock trading again to Tether. Now, Tether is a bit of a sore subject inside the crypto space because of their shady past. And some people don't know about their shady past, but Tether has been fined before for lying about what's backing their token. And they had to pay a $14 million fine in New York courts long time ago. Now, Tether has also been banned from the EU because, again, some shady behavior where they didn't want to keep certain assets, a certain amount of assets in European banks, just in case a depegging situation happens. At least Europe can essentially not let a complete disaster happen because they have Tether's assets in European banks. Not all of it, but at least a certain amount, which Tether rejected too and was completely banned from the EU. Also getting banned essentially from Canada as well, and also the UK. They're not a big fan of USDT either. But anyways, Tether has found a way to push itself back inside the European market space. And the way they're doing it is like this. Tether-backed exchange shifts focus to build essentially a secret plumbing for Europe's largest banks. So Tether is trying to push its way back in. This is according to CoinDesk that was released today. A major cryptocurrency exchange backed by Tether is officially pivoting away from its retail facing identity to focus on building the institutional plumbing for Europe's top tier banks. According to Coindesk, the firm is moving towards a back end only model, providing the high speed settlement infrastructure and liquidity pools necessary for traditional financial institutions to offer digital assets to their own clients. This smells like money laundering up to a certain extent. This strict shift signals a move towards the utility era, where crypto companies act as the invisible foundation for legacy banking systems rather than competing with them for individual users. So what Tether's approach is very different than what Ripple's approach is, pretty much. Ripple is trying to show the world that this is the new finance, that we are becoming a bank, and this is the new finance, and we are competing with the banks. Whereas Tether's approach is investing into a company that's trying to be the silent partner of banks that nobody gets to see but has all the liquidity. The recognition essentially highlights a growing trend of infrastructure as a service within the European financial landscape. Banking integration. The exchange is developing a specialized APIs that allows banks to settle cross-border transactions and manage digital asset custody without ever exposing the end user to a crypto essentially interface. Now, Tether's liquidity. By leveraging its deep ties to Tether, the firm provides banks with access to massive stablecoin liquidity, ensuring that the large scale institutional trades can be executed with minimal slippage. This is very shady behavior, I would have to say, for Tether to be doing. Instead of Tether being transparent with the EU or with the MICA, essentially their compliance for the crypto sector, instead of being transparent with them and saying, look, you're concerned about depegging situations, which has happened inside the crypto sector. One of the biggest ones, Luna, and you're concerned about that. And how about we show transparency by, holding certain amount of essentially of our assets in European banks? We know depegging will never happen, but just to reassure you, we will hold certain amount of assets in European banks so that you are essentially confirmed, if that ever does happen, which we believe it won't, at least you're reassured. That's what Tether could have done. That's the approach that they could have taken, which is the approach Circle took with USDC. However, the approach that they decided to take is to go around essentially the EU and go directly towards buying out or funding a firm that has a license in the MICA and to provide services to banks and let them use USDT. Even though USDT is banned in the EU because of shady behavior, Tether has decided to go around the EU straight to the banks and be their silent partner. I mean, do they want to be charged in multiple lawsuits around the world? Compliance first. The pivot includes a rigorous alignment with Europe's MICA markets in crypto assets and regulations, positioning the firm as a safe harbor for conservative European banks looking to enter the digital space. If there are European banks right now waiting to enter the digital space, don't do it with a shady company that's trying to approach you by looping around your politicians or your laws. And yes, they are using a MICA compliant company to do so, but the token itself that they offer, USDT, is banned in the EU for a particular reason because they can't be transparent. Analysts suggest that this essentially, so you're better off going with a company that actually has a license and is actually transparent. Analysts suggest that this secret plumbing approach is the most viable path for long-term institutional adoption as it addresses the security and branding concerns of traditional banks by removing the retail essentially label the firm is effectively becoming a critical utility provider. And everybody's aiming for this $2 trillion that's going to be entering the market space, the beginning $2 trillion from the Asian market space, which is about 1% of the market space. But right now, everybody's so focused on this $2 trillion that keeps on getting spinned around by everyone. And the first one to start it was BlackRock. But anyways, Tether is thought about essentially looping around the EU and offering a package to the banks on a very silent, hush-hush type of style. Yeah, that isn't money laundering. If that's not money laundering, I don't know what is, I'll be very honest, because, Tether has not only a shady past, but also essentially shady payments where Russia, essentially North Korea, China, Iran, a lot of terror groups, their number one payment system is USDT on Tron network. And now they're trying to loop around the EU. Moving on from Tether to Meta. Meta, Facebook in other words, a long time ago decided to introduce a stablecoin towards the market, which essentially was called Libra coin, if I'm not mistaken, which completely and utterly failed because nobody wants to use a stablecoin designed by Mark Zuckerberg. The guy is not a trusted man, essentially. Mark Zuckerberg has, he's a political tool in some cases. Mark Zuckerberg was a political tool when Biden's administration was there, especially censoring everyone on certain subjects that Biden's administration didn't want people talking about. And, he's the king of censorship when it comes to being used as a political tool. So people just didn't trust him. Or essentially the amount of user data that was shared and Facebook pretended to look the other way. So a lot of shady behavior has happened on Mark Zuckerberg's side. So when Mark Zuckerberg introduced a stablecoin, it was a complete failure. Nobody trusts the man, which means nobody's going to be using his token, which I understand fully. And I've said in the past, never ever, in my own opinion, not financial advice, I will never touch any crypto or stablecoin or tokenization project or anything to do with the blockchain sector involving a figure, an athlete, a celebrity, or a politician. Anybody on that scale or that level, if they introduce a tokenization project, a crypto project, a stablecoin, an NFT project, anything to do with blockchain, I will never touch it with a 10-foot pole because it's just bound to be a disastrous move. So, what is Tether essentially? What is Meta going to be doing now? Apparently, Meta is making a comeback inside the stablecoin sector. So, Meta planning a stablecoin comeback in essentially late 2026, following regulatory shifts. Why are they doing that? Because the stablecoin market space is going to quadruple, even according to Stripe. Mark Zuckerberg's Meta is reportedly planning a return to the stablecoin sector with a launch targeted for the second half of 2026. This move follows the company's previous high-profile exit from the space when its essentially Deem project was shuttered due to intense global regulatory pressures. However, the landscape essentially has changed significantly with the passage of the Genius Act and a more essentially receptive US Treasury prompting Meta to reevaluate how integrated digital payments can enhance in essentially its metaverse and social media essentially ecosystems. The comeback strategy appears to be built on several key pillars designed to avoid the pitfalls of what they did in the past. Regulatory alignments. Unlike the essentially project, which faced immediate pushback, Meta's new initiative is being developed in close consultation with US federal regulators to ensure a full compliance with the emerging stablecoin framework. Now they're, framing it as why Tether, essentially why Meta's stablecoin failed is because the US government didn't have the regulations and essentially they were against Meta creating a stablecoin. That had a play into it, yes, but the other bigger play was nobody was going to use it. Same goes for essentially PayPal stablecoin. No one's really a big fan, essentially a big advocate for PayPal stablecoin PYUSD. If you ask someone who's inside the crypto sector what stablecoin they use, they will typically say USDT or USDC. And nowadays, people would even say RRUSD. Nobody says PYUSD. And nobody's going to be saying, I use Meta stablecoin somewhere down the line, unless somehow Meta is able to figure out how to push their stablecoin into their platforms, which makes people essentially use it, whether they like it or not. Infrastructure synergy. The stablecoin is expected to serve as a primary medium of exchange for Meta's hardware and software products, allowing for seamless low fee, essentially microtransactions within its VR and AR platforms. Institutional partnerships. Reports suggest that Meta is looking to partner with established utility era financial institutions rather than attempting to lead a company of their own, essentially, which that is a smart move on Meta's side. Partnering up with a blockchain firm is a lot more easier than creating your own one, essentially from scratch, especially now. So, Meta is about to be introducing its own stablecoin. Again, is it going to succeed or is it going to fail? I'll be honest, I don't think it will fail again, but I don't think it's going to be widely used unless they genuinely push it within their own platforms. Then it will be used. Now, moving on from Meta entering the stablecoin sector once again to MoonPay. MoonPay has came out with a very very interesting article, and I also just want to point out MoonPay is a brilliant crypto project. I mean, a brilliant crypto platform. If anybody hasn't used it, absolutely amazing. Definitely check out MoonPay. So MoonPay has unveiled a AI on-ramp for Brave's new agent economy. The world of AI has changed a lot, and there's something new that everybody's talking about right now, which is CloudBot, which essentially you're giving an AI system its own house. You could pretty much say the simplest way to put it, and or its own universe. You could even say or ecosystem where it's able to breathe, live, eat, sleep. You could pretty much say and do whatever task you tell it to do, or essentially make its own wages to pay for its own server bills. The world of AI has rapidly changed. We went from asking essentially AI questions on how to do this and how to do that to now telling AI to do this for me and to do that for me. Big difference. So, MoonPay introducing this interesting feature. MoonPay has announced a strict partnership with Brave to launch a specialized AI on ramp, especially designed to facilitate payments within the emerging AI, essentially AI agent economy. What they mean by agents is people who use essentially AI nowadays are creating these agents, and these agents, the simplest way to put it, are employees. So let's say you want to create your own company. Instead of going and hiring out people and paying them per the hour, you could just get yourself an AI agent, which can also be costly if you don't know how to use it properly. A lot more costly than having one employee. But if you, essentially use it correctly, it could work out very cheap for you and very beneficial for you. Now, what's missing is the segment of, money when it comes to AI agent essentially bots. Some people create their essentially AI agents a wallet, a crypto wallet, which they can use for crypto transactions. But MoonPay is trying to make everybody's life essentially simpler. It's a very unique feature. I think it's going to do MoonPay a lot for them. This initiative allows users to fund autonomous AI agents with digital assets, seamlessly enabling these programs to perform complex financial tasks, purchase data, or pay for computing resources without manual intervention, in other words, without you getting involved. By integrating directly into the Brave browser, which is a great browser as well, by integrating directly into that, the service aims to provide the necessary liquidity for a future where AI to AI transactions become a dominant force essentially in a digital commerce. Now, the topic of an AI to AI payment system has been discussed before in the past, where they said if we want to live in a fully autonomous world where AI takes care of everything, then there has to be a digital payment system because we can't have robots running around with cash in their hands. The idea of it is just stupid to begin with. So, this is why essentially blockchain and AI are pretty much hand in hand of the world going digital. Both of them need to happen essentially. Well, AI relies on essentially blockchain a lot more than AI companies will believe so. But that is actually what they're talking about, AI to AI payment system in a world where everything goes digital. Essentially, your AI robots, it could be through your computer or it could be an actual AI robot, is able to do transactions. And but this is like the first early steps where it's just a browser integration to begin with. Autonomous transactions. The on-ramp allows AI agents to manage their own digital wallets, facilitating essentially micropayments for AI for API access and on-chain services. Brave integration. By leveraging Brave's privacy centric user base, the partnership provides a secure environment for users to delegate financial authority to AI tools while maintaining strict controls over their primary funds. Essentially programmable liquidity. The system is built to support high frequency, low latency transfers, ensuring that AI agents can react to market data or service demands in real time. Market analysts also suggest that the agent's economy could represent a multi-billion essentially dollar frontier on the blockchain industry as more tasks are automated via LLMs and specialized AI models. MoonPay's move essentially positions it as a foundational layer for this shift, moving beyond simple retail on-ramps into the realm of machine-driven finance. As AI agents essentially increasingly require digital cash to operate effectively, this partnership with Brave essentially sets a new standard for how humans and machines will interact within the global financial ecosystem in 2026. Not only are we essentially, having this whole digital transition happening inside the crypto sector, but there's a massive digital transition happening inside the AI sector as well. The day is going to be coming where essentially AI robots will be making payments for people. It is you could say a Hollywood film, you're pretty much living in, like I Robot, you could even say similar cases. Many films out there, I guess people could name. Now, moving on from MoonPay's newest payment system, which is very unique and I think is going to bring a lot of essentially cash flow for the company of MoonPay. Amazing idea, honestly. Moving away from that to Jane Street. Jane Street right now is facing essentially insider trading allegations over its role in Terraform Labs' collapse. If you're new inside the crypto space, you wouldn't know anything about Terraform Labs, which is Luna, which was one of the biggest crashes we saw inside the crypto space. Not the biggest, but one of the biggest crashes we saw in the earlier days inside the crypto space. And there was always this rumor around Luna where it wasn't as simple as they put it. Depegging situation, stablecoin goes down, Luna goes down because it's pegged to this coin, and a lot of people lost money. It was bigger than that, is what's being suggested. Even back then, the founder of Luna essentially said that there was a coordinated attack to bring Luna down on purpose to crash the market space, and that certain behemoths had a hand in bringing Luna down. But nobody wanted to hear this man out. Instead, they want to put handcuffs on him and throw him into a prison cell. And he could be lying, to be fairly honest as well. He could just be saying that to, not go to prison. But he could also be telling the truth. There's, two sides to every story. So, why is Jane Street being right now, you could pretty much say, investigated, you could say even? So, Wall Street powerhouse Jane Street is facing serious allegations of insider trading that reportedly accelerated the catastrophic collapse of Terraform Labs back in May 2022. According to a report by the Financial Times, Legal claims suggest that the firm used non public information to aggressively short Terra's essentially UST stablecoin during its initial depegging event. These allegations allegedly intensified the downward pressure on the essential stablecoin, turning a localized liquidity crisis into a total market contagion that wiped out billions of dollars in investor wealth overnight. So they're saying essentially Jane Street put more pressure just as the depegging was about to happen by shorting essentially its stablecoin, which caused the crash to accelerate, you could pretty much say, into the ground. The allegations center on internal communications and trading data that suggest the firm was aware of the systematic vulnerabilities before the broader market. In other words, they had some inside information. Jane Street had inside information that Luna had some issues, and instead of Jane Street essentially, letting the authorities know, they decided to take advantage of the vulnerabilities essentially of Terraform Labs. Now, some may argue, it's business at the end of the day. Jane Street did what they should have done to make profit for themselves, but also the big question isn't essentially the question isn't Jane Street is it's business at the end of the day. They were trying to make money. The question is who shared that information with them, because that's inside information. Not that they should have shared it with the authorities. That's up to Jane Street if they wanted to do that. But the bigger question is who shared that information with them, because that's inside information. And that could be essentially in terms of fraud allegations as well. The allegations center on internal communications and trading data that suggest the firm was aware of these vulnerabilities. The claims allege that Jane Street executed massive sell orders on UST while simultaneously positioning itself to profit from the crash of Luna token. On one side, Jane Street, receiving that inside information, decided to short the stablecoin of Luna. On the other side, they were also essentially increasing their short position on Luna's own token. They actually put fuel on the fire. The amount of people that lost their jobs, homes, families, and lives because of Luna overnight, it's ridiculous. And Jane Street allegedly took advantage of that. They took advantage of people losing their homes, their jobs, their families, and their lives overnight. They took advantage of that. They had inside information that they could have shared to fix the vulnerabilities. Instead, they exploited the vulnerabilities to make money for themselves while people lost their families, jobs, houses, cars, and, as I said, their lives. Now, regulators are examining whether the firm essentially gained access to private data regarding Terraform Labs' defense reserves, allowing them to time their trades with surgical precision against the protocol's attempts to stabilize the peg. The report suggests that sheer volume of Jane Street's trades may have been a tipping point that overwhelmed the curve finance pools, making the essentially eventual death spiral of the ecosystem. In other words, Jane Street was the core reason, the main reason why Luna pretty much went into the ground. While Jane Street has not yet provided a formal response to the Times or these allegations, the latest claims that the news has sent shockwaves throughout the institutional trading community. This development is being viewed as a critical test for the utility era. As regulators look to apply stricter traditional finance TradFi oversight to legacy crypto events, if proven true, these allegations could lead to a massive fines and set the legal precedent for how market manipulation and insider trading are prosecuted in the decentralized asset space moving forward. This is also good because this could put not a full-on end, but this could essentially make companies think twice about manipulating the crypto market space. And they're not the only ones essentially manipulating the crypto market space. There's a lot of companies out there that are benefiting from manipulating the crypto space, which should come to an end, in my opinion, as well. Now, Ripple, XRP, SPI. Now, we talked about on yesterday's live show regarding finally we starting to see the fruits of SPI and Ripple, which I said a while ago as well that just because two companies come together, it doesn't mean overnight everybody makes millions. That's in Hollywood, the reality of two companies coming together. There's a partnership, there's a foundation that's going to be built. There's a lot of testing, essentially a lot of money spent and hours and so on. And then we get the results somewhere down the line, which we got yesterday with SBI essentially making the announcements of, regarding tokenizations, and XRP Ledger is what they've chosen to go ahead with, which might have disappointed a lot of people because some people thought it was going to be Chainlink that was going to be chosen as the king for essentially the route of payments for SBI. Turns out it was XRP Ledger, which if you're inside the XRP community, you already knew it was going to be XRP Ledger. They have a company named SBI Ripple. There's no company named SBI Chainlink or SBI HBAR or SBI Solana, but there is a company named SBI Ripple. So that should have been people's first indication that obviously SBI's first choice is always going to be XRP Ledger. At that point, it should have just been common sense. But we have an update on SBI essentially and Ripple and XRP. And that update is SBI and Ripple to deploy XRP for cross-border payments between Japan and South Korea. SBI Holdings and Ripple have announced a major expansion of their partnerships, officially deploying XRP-based cross-border payment corridors between Japan and South Korea. This initiative leverages the XRP ledger's speed and essentially efficiency to facilitate real-time remittances between two of Asia's largest economies. By integrating Ripple's payment system and technology with SBI's extensive banking infrastructure, the project aims to replace slow and expensive legacy systems with a modern blockchain-based alternative. The deployment marks a significant milestone inside the institutional adoption of XRP Ledger within the Asian financial sector. Enhanced liquidity. The corridor utilizes XRP as a bridge asset, allowing for instant conversions of Japanese yen to Korean won without the need for pre-funded Nostro accounts. What they mean by that is how the banking sector essentially has been operated for the longest time is that every bank would hold a certain amount of currency for the major currencies, you could pretty much say. So a British bank will be holding Chinese essentially yen, or essentially Japanese. They'll be holding essentially Chinese yuan, Japanese yen, euros, dollars, pounds, obviously, and so on. And when an American client wants to make a payment through American bank to the British banks, then obviously the American banks need to be holding British pounds and euros and so on and so on. And that goes for every bank. And that's just how the world operated, where banks, nostro accounts, in other words, had multiple currencies in their vaults, you could pretty much say, to make transactions happen. But when XRP is in the play, you don't need to hold 25 different types of currencies in a bank. You could just hold XRP, and it plays the middleman role for every currency, which is exactly what's being used right now. Well, mentions of going to be used right now, where the Japanese yen to Korean won without needing for pre-funded Nostro accounts. Banking network integration. Major financial institutions in both essentially in both countries are expected to join a network providing millions of retail and corporate customers with access to near instant international transfers. This move aligns essentially with the progressive digital asset framework in both Japan and South Korea, which have increasingly recognized the utility of the XRP ledger for regulated financial services. Now, we talked about also, the Asian market space is absolutely massive. And even BlackRock talking about it last week, where just 1% of the Asian market space, roughly about $2 trillion, entering in terms of liquidity for the crypto sector, just 1%. And now we have announcements of, Japan talking about XRP in terms of SBI, in terms of tokenization. Then straight away yesterday, we had also the announcement of the UAE in terms of tokenizations on the XRP ledger, and that, they said Japan is setting some sort of precedent. Now today, we're getting announcements of between payments happening, payments that are going to be happening between Japan and South Korea, where XRP plays as the middleman role, which was exactly what it was designed for. Industry analysts view this partnership as a definitive proof of concept for the utility era, demonstrating that XRP could function as a critical piece of global financial infrastructure. As transaction volumes grow, the success of the Japan slash essentially Korea corridor is expected to serve essentially as a blueprint for further expansions across the broader Asia Pacific region. This collaboration reinforces Ripple's dominance in the institutional payment space and underscores SBI's role as a primary driver of blockchain innovation in the global banking industry. This is incredible news, to be fairly honest. This announcement of Japan and South Korea using XRP as their middleman, or even yesterday with Japan and SBI mentioning essentially XRP in terms of tokenization is going to be used, or essentially UAE mentioning tokenizations and XRP is going to be used. This is, the foundations that we've been talking about for the longest time. The announcements were a long time ago. Ripple partnered with this company, that company. And this was all, a year ago, 2 years ago, 3 years ago, 4 years ago, 5 years ago. Well, now, again, as I mentioned yesterday, we're starting to see the fruits of what they did in terms of their partnerships back then and the building that they did to the level that we got now. Incredible news, amazing news, honestly, to be fairly honest. And we know for a fact, Clarity Act passing through, what's going to be happening next? On that essentially news, we have reached the endings of tonight's live. This was the CMF live show. It stands for Crypto Mouse Family. My name is Miles. You can tune this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI politics, and regulations. And also, you get my perspective on every news that I share with you. As I said, on that note, we have reached the endings of tonight's live. The disclaimer of this live show is not financial advice, not political advice, and whatever I say is only for entertainment purposes, as always. So before we do obviously go, let's go inside the comment section. This was happening there. And this is episode 447 of the CMF live show everyone's watching right now. If you haven't, like and retweet this live show on X. Check out my Substacks as well. If you already haven't, every day I release one Substacks at 12:30 essentially PM London time, British time in other words, and also at the exact same time Eastern time for the US, 7:30 in the morning. So I release one Substacks a day where I share you the news or what's happening or what's going to be happening, and then underneath it I share you my perspective, where essentially I simplify everything for you. So go and check that out if you already have it on terms of my Substacks. So let's go to the comment section. Obviously, before we do go, let's see where we were at. We were here, I think. I can't wait for Ripple goes public. I'd like to own 10 shares. I wouldn't be greedy, just satisfied. This is how much I think about the possibility of the stock. Let's go, Scott. Miles' thoughts on Dodge and Shiba. I've held them for over a year. Good projects in terms of what's behind them. Elon Musk behind Dodge. As long as he's there, Dodge will survive. Shiba Inu, massive community. As long as the community is there, it will survive. Let's go, Miles. Let's go, Peg. Good night, Miles, and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, but sometimes as usual. Great job tonight, Miles. As always, love and respect you, my brother and my friend. Let's go, Scott. See you tomorrow, but the same time as usual. Thanks, Miles. Have a great night and see you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual as well. Another great program, Miles. Let's go, Scott. Good night, Miles and family. Great live. Many thanks. See you tomorrow, brother. Let's go, Ian. See you tomorrow, same time as usual. Good live, Miles. Thank you. Good night, Miles and CMF. Jason. See you tomorrow, but the same time as usual as well. Great live. Thanks again, Miles. Let's go, commenter. See you tomorrow, same time as usual. Thanks for another great live. Take care, Miles and CMF. Let's go. Let's go. Ray, see you tomorrow, but at the same time as usual. Good night. Congratulations on program 447. Thank you so much, Scott. Great insights as always, Miles. Thanks for your time. Have a great day and night, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well, Shelly. Good night, Miles and CMF. Thanks for all the great news. Let's see you tomorrow. Let's go free forever. See you tomorrow, same time as usual as well. Congratulations on program 447. Let's go, Scott. Good night, Miles and CMF. See you guys tomorrow night. Let's go, Funky. See you tomorrow, same time as usual as well. I will see everybody tomorrow, same timing as usual, 10 p.m. London time onwards for the next episode of CMF Live Show tomorrow. Everybody have a great day or a good night, depending on where you're around the world. Good night, Miles. God bless, brother. Let's go, Cali. See you tomorrow, sometimes as well. Like, follow, subscribe, share, retweet if you already haven't. If you have, thank you so much. I will see all of you tomorrow, same time as usual, 10 p.m., long time onwards. Love you all. Have a great day or good night, depending on where you're around the world.